What does it mean when a city's real estate market shows both resilience and transformation in the face of national shifts? Welcome to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoan. Let's get right to it. In today's spotlight, we're examining the commercial real estate market in Tyler, Texas, which is showing signs of resilience and transformation, offering valuable insights for investors, business owners, and residents alike. As we navigate the second half of 2025, Tyler's market continues to demonstrate its robustness against national trends. Starting with retail, Tyler boasts a strong asset value of $3.37 billion, ranking as the highest among commercial sectors. However, the market faces a 5.0% vacancy rate and a negative net absorption of 86,695 square feet over the past year, indicating some softening. Despite these challenges, the asking rents remain healthy at $17.57 per square foot, making the sector attractive for investors seeking stable returns. The office sector in Tyler is quietly outperforming expectations, with a low vacancy rate of 3.7% and strong net absorption of 133,306 square feet becoming occupied. This efficient use of office spaces is complemented by an average asking rent of $20.30 per square foot, while the sales volume has surged by 124% over the past year, showcasing the sector's strength. However, the industrial sector is experiencing some turbulence, representing nearly $962 million in value. This sector currently has a 7.4% vacancy rate and a negative absorption of 440,212 square feet, suggesting a possible overbuild. Yet, with low rents at $6.60 per square foot, cost-sensitive occupiers and opportunistic buyers may find appealing opportunities here. These data points reflect Tyler's broader economic health, characterized by a 1.8% job growth, a stable population, and a median household income of $74,258, which has increased by 2.8%. Employment in the area is growing well above national averages, making Tyler a magnet for business investment and quality living. Whether you're a local entrepreneur eyeing expansion, a homeowner tracking neighborhood trends, or a retiree exploring passive income from real estate, understanding these numbers helps you make informed choices about living in Tyler and in East Texas. Moving on to some intriguing developments in the retail real estate sector, Cibus, a significant player in the field, has recently expanded its portfolio with 10 new acquisitions. This expansion spans across Sweden, Denmark, and Belgium, involving 4 separate transactions and totaling approximately €36.5 million in property value. Let's break this down. In Sweden, Cibus acquired a Willys Hemma store located in central Enköping for €2.9 million. This 2,100 square meter property is anchored by Axfood and was financed with a combination of cash and a 50% loan to value from a local bank. Additionally, in Ludvika, they purchased a Willys store for €9.7 million. This particular property, measuring 4,400 square meters, is also anchored by Axfood along with other tenants such as a pharmacy. It was acquired from Rotia Fastigheter. Crossing over to Denmark, Cibus signed an agreement to acquire a portfolio of 7 properties from a group of private investors for €22.3 million. These properties are located on Zealand and Jutland, encompassing a total of 9,100 square meters, and are fully leased to major tenants including Salling Group, Coop Denmark, and Rema 1000. In Belgium, Cibus is adding a Proxy Del Huis grocery store in Meerhout, province of Antwerp, to its portfolio for €1.6 million. This 1,300 square meter store is leased to Ahold Delhaize and was acquired from a private investor with financing similar to their other acquisitions, involving a 50% loan to value from a local bank. According to Christian Fredriksson, Chief Executive Officer of Cibus Nordic Real Estate, the company is steadfast in its converting food into yield strategy, having completed 6 acquisitions of 16 properties in 4 countries throughout July, totaling €98 million. Since the start of the year, Cibus has announced 18 acquisitions in 8 transactions across 5 countries, with a total acquisition value of €107 million. The market for grocery store properties remains highly fragmented, with a diverse range of owners, from individuals to large companies and grocery chains themselves. Cibus continues to actively evaluate potential acquisitions and develop its pipeline in this market. The company generates about 95% of its net operating income from properties leased by grocery and daily goods chains, with major tenants including Kesco, Tokmanni, Coopsferry, S Group, Rema 1000, Lidl, and Dagrofa. As of the end of June, Cibus's portfolio consisted of 637 store properties primarily situated in growth regions across Finland, Sweden, Norway, Denmark, Belgium, the Netherlands, and Luxembourg. With this strategic expansion, Cibus aims to strengthen its presence in the European retail real estate market. Blue Star Properties has made a strategic acquisition by purchasing a vintage riverfront office building in Chicago for a significantly reduced price compared to its valuation a decade ago. The firm is planning an ambitious revitalization project, budgeting more than $50 million to modernize the building with hospitality features and new amenities. This move aims to attract new tenants by offering enhanced facilities and a fresh appeal. The building's location along the riverfront presents a unique opportunity for Blue Star Properties to capitalize on the scenic views and prime positioning. By integrating hospitality elements, the firm hopes to create a vibrant, multi-use space that meets the evolving demands of office tenants in the current market. This acquisition and subsequent revamp reflect broader trends in the commercial real estate sector, where properties are being reimagined to align with new work environments and tenant expectations. As office spaces evolve, incorporating amenities that enhance tenant experience is becoming increasingly important. In the context of Kitchener, Waterloo, and Cambridge in Ontario, similar trends can be observed. Office spaces in these regions are also focusing on tenant-centric features to remain competitive. With a robust tech sector presence, these cities are witnessing a surge in demand for office spaces that offer flexibility and modern amenities. Comparatively, the American market, as reflected by Blue Star Properties' investment, shows a parallel shift towards revitalizing existing structures to attract tenants. This cross-border relevance highlights the universal nature of evolving office space demands, where both Canadian and American markets are adapting to create environments that foster productivity and tenant satisfaction. Stockdale Capital Partners has successfully closed a $700 million fund aimed at acquiring distressed properties on the west coast of the United States. This strategic move is backed by global institutional investors who are betting on a recovery in the real estate market. Stockdale Capital sees an opportunity to capitalize on the current wave of market distress and believes that the timing is right for such investments. The fund's primary focus is on the redevelopment of properties, and one of the highlighted projects is the transformation of San Diego's Horton Plaza into a $550 million mixed-use center named the Campus at Horton. This project exemplifies the firm's approach to revitalizing properties with potential for significant value enhancement. This initiative by Stockdale Capital reflects a broader trend in the real estate sector where firms are looking to acquire and redevelop distressed assets. The strategy is to unlock value through redevelopment and repositioning of these assets, offering a new lease of life to properties that have been underperforming or are in strategic locations. In the context of Kitchener, Waterloo, and Cambridge, Ontario, there's a similar focus on revitalizing office spaces and mixed-use developments. Developers in these regions are increasingly looking at ways to breathe new life into existing properties, particularly in tech-driven markets where demand for modern, flexible workspaces is on the rise. Comparatively, the American market, as demonstrated by Stockdale Capital's investment, shows a parallel approach towards transforming distressed properties into vibrant mixed-use centers. This cross-border relevance underscores a shared understanding in both Canadian and American markets of the importance of adapting to evolving real estate demands. The city of Lincoln, California, is embarking on an ambitious plan to develop one of its largest remaining parcels of undeveloped land, totaling approximately 84 acres. This land is strategically located adjacent to the city's airport, providing a prime opportunity for development. Lincoln officials have announced that the city will initiate a Request for Information, RFI, followed by a Request for Proposal, RFP, process. The aim is to attract a developer who can transform this city-owned land into a thriving job center, offering well-paying job opportunities to the local community. The development of this land is part of a broader strategy by the City of Lincoln to enhance its economic landscape and provide more employment opportunities. By focusing on creating a job center, the city intends to boost local employment and stimulate economic growth, aligning with broader urban development goals. This initiative reflects a growing trend in urban planning, where cities are leveraging available land near key infrastructure, such as airports, to maximize economic potential. The proximity to the airport is expected to be a significant draw for developers, offering logistical advantages and increased accessibility for future businesses. In comparison, similar efforts are underway in regions like Kitchener, Waterloo, and Cambridge in Ontario, where development near major infrastructure is also seen as a catalyst for economic growth. These Canadian cities are keen on transforming available land into commercial hubs to attract businesses and foster job creation, mirroring Lincoln's approach. Across the border in the United States, cities are increasingly recognizing the value of strategic land development near airports and other transit hubs. This cross-border relevance underscores a shared understanding of the importance of strategic location in urban development and economic planning. By inviting proposals for this development, Lincoln is taking proactive steps to ensure that the land is used in a way that benefits the community economically and socially. This approach highlights the city's commitment to sustainable growth and the creation of vibrant economic zones. Thank you for listening to the Commercial Real Estate Insights podcast. I'm your host, Steve Haymoon. See you on the next one.